Listen to me. If you are retired right now, or if retirement is right around the corner, and you are living on a modest or low income, I know exactly what is keeping you up at night. You are sitting at your kitchen table, looking at your fixed monthly income, and you are asking yourself one terrified question: is the IRS coming after my hard-earned Social Security check? You spent 40 or 50 years working your fingers to the bone, paying into the system, and believing that once you crossed that finish line, you would finally get a break. And now, everywhere you look, someone is telling you that taxes don't stop just because you retired. It creates panic. It creates fear. You worry that if you pull a tiny bit extra out of your savings or take a small part-time job to survive inflation, you are going to trigger a massive tax bill that you simply cannot afford to pay. I need you to stop, take a deep breath, and listen to every single word I am about to say to you today. The big question everyone asks me is, do low-income retirees actually have to pay federal income tax? Here is the honest truth. It all comes down to how your income is structured and what the government calls your provisional or combined income. Many people believe that the moment they start receiving Social Security, the IRS takes a cut right off the top. That is a myth. If Social Security is your only source of income, guess what? In almost every single case, you owe zero federal income tax on those benefits. Zero. The system is set up so that low-income seniors relying strictly on Social Security do not get taxed on that money. Where the trouble starts, and where so many retirees get caught completely off guard, is when you have a little bit of other income. Maybe you have a tiny pension, or you take a few $1,000s out of a traditional IRA or 401k, or maybe you earned a little interest in a savings account. The IRS uses a specific formula to figure out if your Social Security becomes taxable. They take your adjusted gross income, add any non-taxable interest, and then add exactly 50% of your total Social Security benefit. That total is your combined income. Now, here are the numbers you must memorize. If you are filing as a single person and that combined income is under $25,000, your Social Security is completely tax-free at the federal level. If you are married filing jointly, and your combined income is under $32,000, your benefits are completely tax-free. If your combined income goes between $25,000 and $34,000 for a single person, or between $32,000 and $44,000 for a married couple, up to 50% of your Social Security benefits can become subject to ordinary income tax. And if you make more than that, up to 85% becomes subject to taxation. Notice I said up to 85% of your benefit is subject to tax, not that the IRS takes 85% of your money. That is a mistake so many people make. It just means that portion gets added to your total taxable income. Now, why am I telling you this? Because knowledge is power, and protection is everything. When you are on a low or fixed income, you also have powerful shields available to protect you. First, once you turn 65, your standard deduction goes up. You get the base standard deduction plus an extra senior deduction allowance. Between the standard deduction for seniors and the extra tax credits designed for older Americans, many low-income retirees end up owing absolutely nothing in federal income taxes even if they cross those Social Security thresholds slightly. So what are your actionable takeaways starting today? Number 1, check your income sources right now. Look at your 1099 statements at the end of the year. If your only income is Social Security, you likely don't even have to file a federal return. But if you have other taxable income pushing you close to those $25,000 or $32,000 limits, you need to be strategic. Number 2, be smart about withdrawals. If you need extra cash, withdrawing from a Roth IRA is completely tax-free and does not count toward your combined income calculation. If you withdraw from a traditional IRA, every dollar counts against you. Number 3, beware of state taxes. Federal tax is only half the battle. Check your specific state laws, because many states do not tax Social Security benefits at all, while a few still do. Number 4, don't guess. Use free community resources like ARP TaxAid or VITA, Volunteer Income Tax Assistance. These are IRS-certified programs that prepare tax returns for seniors and low-income taxpayers completely free of charge. Do not let fear control you. Understand your numbers, protect your money, and stand tall in your retirement.